Hello dear traders, today is Tuesday, November 2nd and I'm online again for the fresh market review prepared for InstaForex. Let me remind you about a big holiday, Cultural Workers' Day in Kyrgyzstan. I congratulate these hard-working people on their professional day. We wish them health and wealth, no big to serious things. Have you heard that OPEC is comforting the US because the US is fighting for cheap petrol for its citizens? Facebook has been moving into the crypto world, isn't it mind-blowing news? Mark Zuckerberg is full of awesome ideas. I used to think that Facebook is an old-fashioned platform which nobody is interested in, but Zuckerberg attracts cool specialists. Now the company has a bright future. Besides, the S&P 500 has printed new all-time highs. Yesterday, the US stock market closed with a peculiar inner bar without a body. This means that the S&P 500 is easing its rapid rally. This nearly a month before Thanksgiving Day. In December, Americans are getting ready for Christmas. With such events ahead, investors could fix profits on long positions and S&P 500 may start a downward correction. We can make some money on this, so let's discuss our charts in detail. Today, the euro has been briefed to test a 50% Fibonacci level under selling pressure. The euro slid to a 30% level. Someone entered the market. Well done. Interestingly, the euro-dollar came under strong selling pressure on Friday. Hardly anyone can explain the reason for this. I totally disagree with Western analysts on this point. I guess this move was triggered by some insider factors. The market didn't rush to sell the pair. Yesterday, both European and American traders were buying the euro-dollar pair. The idea for this trading instrument is pure selling. It will be great to sell for a 50% Fibonacci level. A stop loss could be placed 60-70 pips upward and a take profit is 80-90 pips downwards at a breakout of the bearish momentum and the low of the year. Such unpredictable moves are common things at the end of the year. Today is only November 2nd and we have 2 months before the year ends. Perhaps the euro-dollar pair will get stuck flat and buyers will be squeezed out of this zone. On the other hand, I'm confused that the downward move wasn't based on fundamentals. There are fundamentals for the buying pressure such as the ECB policy update, press conference, and weak US GDP data. Yesterday, the inner bar was also formed. It didn't break the low of the year that was 19 pips away. The Americans were buying yesterday. I haven't opened short positions yet. Why? I want to see some confirmation of the American selling sentiment. I want to see the US dollar strength. It would be a good idea to sell the pair on a simulator. I mean to sell from a 50% Fibonacci level. I expect to see Americans selling the pair. The pair could trade sideways for a while and then went downwards, pushing buying away from the market. So I'm holding long positions on gold, which I opened on Friday. Gold is trading a bit higher now, which means the weaker US dollar. This idea fits into the downward trend of the US dollar from the fundamental viewpoint. For example, poor US GDP and other things. On Friday and yesterday, Americans were buying gold. There is enough space for gold's uptrend. The metal could appreciate 500 pips. I think the greenback is set to lose ground, so the idea of temporary dollars reinforcement seems weird to me. I urge you to trade cautiously. You may trade in small portions. Gold is trading with the overall uptrend. Developments yesterday are a good sign for buyers. Sellers should also be careful with short positions. Gold left a double bottom 2 weeks ago. There is also the seller's target next to it. Sellers might have their stop losses activated. I mean, there is a probability that gold will reach 2 targets. I would recommend opening long positions at retracements. Silver has not made any retracements to buy the metal at lower prices. Those who have already bought silver are now with gains. You have been keeping gain for a month. If you want to withdraw your profit and spend it on Christmas gifts, you will have this opportunity at a breakout of 24 or 25. The pound-dollar pair. The pound made a 50% retracement after a rise. Looking at the daily chart, you see that the sterling was growing for the whole previous month and slumped in 3 days. This fall as low as a 50% Fibonacci level. I have an idea for those who want to buy it. There are downward targets which haven't been broken yet. I see a nice target of 1.36. Everyone understands it's important. If you open long positions at about this level, you will be able to earn on the price section to the upper border of the trend line channel. The price may exit this channel as it has tried it 4 times. The 5th time could push the price upwards. Another thing, there is a big plan for buyers the sterling on the weekly chart. The fact of buying the pound day by day indicates that the uptrend is valid. The pound sterling has touched to the highs of 2018 and 2016 when the UK voted for Brexit. Logically, the pound could surge to see such high again, and we earn some money. So that's all I wanted to tell you today. Manage your risk and take care. Bye bye.